syndicate, you need investors, you need capital, you need people who will trust you. And it can't be blind trust. I mean, you can sort of get your mama and your grandmama or somebody and say, oh, here you go, baby, I got you. But, I mean, the reality is, if you're trying to scale, if you're trying to build something that is a real business, you need investors and people who you don't know today, who will come in, who will look at you, who will evaluate everything that you're doing, and who will want to invest with you. So also the relationships are absolutely key. Now, that's just one side of it, is finding the money. The other side of it is finding the deal. So you need broker relationships. If I don't have any experience, and I call Tony and say, hey, Tony, I'm a new investor, give me the best deal you got, right? You think Tony's going to spend his time with me or so many other people in this room who's already closed deals with, right? I mean, I work with Tony, and Tony still don't come to me first. So like, he knows that guy's going to close. He's just going to run with the numbers like you. I'm going to tell him, hey, you need 20 million? Cool, he's going to write me off 20 million. So you need to build relationships like that. You need to tell the broker what you want. You need to tell them exactly what you want, what you're looking for. The neighborhood, hey, it needs to be on this side of the track or that side of the track. It needs to be in this school district, not that school district. You need to have pitch roofs. It needs to be built in 1975 and newer. You need to have every detail of what you want. So if you don't, so one, for you to know that that's it. I found it. It works. It fits my criteria. But then also so brokers ain't wasting their time because they get paid when they do a deal. Them looking and drive around the city and sending you stuff, they don't make money on that and they don't want to do it. So they want people who are going to close and make the money, and you need to show off that you are a closer. So I mean, everything you can do to prepare and make yourself a serious investor is how you get to that next step.
In the lab, that's good stuff. It's really good stuff. April, this is what I was talking to you about that deal.
Okay.
Where there was no experience. I said, hey, let me connect with some guys that I know.
Okay.
You couldn't wrap your head around it. Like, he didn't know those people.
Right.
Well, you don't have to know, right?
I
Look at the value to it. So, good stuff. Noah, I want to put you on the hot seat really quick. Fortunately, this is the deal that Tony referenced that another lender didn't want to do because they had sold off some of their existing units. And we looked at it. We liked what they were doing. And we did the deal. Noah and his partners, I'll let him talk, but you know, as Tony said, smart guys, Stanford, I think Yale, right? Very smart guys, have a vision for building and growing in this, and they're connected, and Tony has connected them to resources, and I think we've been one of those. So Noah, if you can just give us an overview of how you got started, talk about your partners and what you guys are looking to do.
Absolutely. Yes, I'm Noah Neal. I'm from California originally, where things are a lot more expensive. I moved to Chicago in 2013 for work. I've always been interested in investing. Started off in securities, more so as a hobby, but had interest in real estate as well. Had concerns about capital and financing. I think John kind of is in a spot where you were at in 2012, just as far as the capital to get started. But I recognized a lot of good deals in Chicago. And around 2014, I teamed up with some business partners, guys from school who are also
little bit louder.
Who are also Chicago natives. 3 to 4 units in 3 to 4 unit buildings in part of Chicago, McKinley Park, and Pilsen. We managed them for about 2.5 years, and we sold in 2017. I actually reached out to Tony, and I can really speak to the strength of Hardy-Heitzman. We were referred to a broker that specialized in more 3 to 4 unit buildings. We sold off that portfolio with the goal of trading up. And we ended up purchasing our first commercial mixed-use property in 2017. This is an 8-unit with a barbershop hair salon business. So we had a couple pivots, but eventually we met up with Mark and Lima One Capital, and it went very well. They did exactly as they said they would, and brought us to completion. We pivoted last year to refinance with you and Fang and Eric. Since then, we've closed on another a 10-unit property close by, and working with Lima again on a 6-unit that's a value-add opportunity, and are currently in a buying process now for another 12-unit residential. So it's went very well. We're just looking to continue scaling.
scaling, it's a key word, I mean, so growth. I'm gonna go back to you, John, real quick before we get to some of our due diligence part. What did you identify as need items in order to grow and scale, and how did you implement it?
I mean, I think the thing that led me down the path was money, right? And I felt like I was finding pretty good deals, but I had no capital to do it. Once I bought a property, I pretty much just stopped looking because it was going to be a year before I saved up the money, right? So capital was a big thing, and I sat down with
Thanks, man, for
the
doing
really
this
close
on
friend
short
who was
notice.
a lot more successful.
Like yesterday,
And
right?
I
Can you do
basically
this?
told her all that.
Gotcha, man.
I
Push on
find
appointments, man.
stuff that,
I suppose we should have been some
but I'm out of money. And she basically said, well, listen, everyone I know runs out of money. And they either do one of two things. One is they wholesale or flip houses to start generating more money and then use that to invest in long-term multifamily, or you raise money from
But
other
she
investors.
said something about
And
other
at
stuff
that
coming up
point,
in the
that light
future.
bulb went off, and I said, okay, but I was actually very scared of taking on investors' money, because for me, we had a lot of success. I'm a pretty smart person. I did not go to Yale or Stanford or any other Ivy League school, and I think we all have a little bit of self-doubt, right? And as smart as you are, as many books as you can read, as many podcasts you can listen to and who you connect with, there's still this thing of real-world experience and understanding what the dynamics are and what's happening. So I think I was very fearful of that. And that's why it took a really long time to educate myself. I hired a coach. I listened to everything I could. I read as many books as I could. I underwrote as many deals as I could. I met with many brokers. Every time I would move out on a deal or against a deal, I'd follow a broker. What is sell for? What they do? How do they underwrite? And I just would learn what are the tricks that everyone else was doing. And that finally got me to a place where I felt comfortable enough knowing what a deal was and then aligning with other partners. And I think the other part was, you have to leverage in this industry, and leverage is through network and relationships, but my background is in marketing, and I will tell you, there's a reason why when you turn on the TV, brands have a celebrity that's trying to pitch their products, because they're trying to leverage their equity. If so-and-so is cool, and so-and-so is taking this product, that makes this product cool, right? So it happens in real life too. You may not recognize it, but when you get a room together, and you get certain people who are connected to certain brands together, you now start running those circles and you get elevated. So you get to pull yourself up, you get to surround yourself with people. So the more and more I started spending time with those kind of individuals, the more comfortable I got, the easier it was to start reaching out to investors in my database, people I have relationships with, and going out and saying, hey, here's the deal, here's why I like it, here's my concerns, here's the things you need to watch out for, but here's how we're going to mitigate those risks.
Right. So he sounds like the bank, actually. That's how you underwrite some deals and trade. Noah, how do you underwrite your deals? What are you looking for neighborhood-wise, and how do you do on the back end of that when you're looking at it?
So we're looking at looking for higher cap rates. We were able to go as quickly as we did, mainly through equity partnerships. I have several different partners in each particular deal. Financing is kind of more standard. With you guys, value add opportunities, 8.99%, and with Eric, the test he described, 20% down. So we are a little bit more standard, I say, as far as just saving up enough for that down.
All right. So that's great insight from team owners. And I want to kind of go to some of our value-add partners in the transaction. Rob. I love talking to Rob. I've only just met him a couple weeks ago, but the passion and his knowledge base, Tony already gave you an overview. Give us an overview of your background, what you do, and how you add value for John and Noah, guys like that.
Great. Well, we start by trying to add value right at the beginning, because what we talked about a lot here today with the panel that has been up here and the conversations that have taken place outside is the risk end, right? And everything's about trying to de-risk it. The bank's trying to de-risk it. You're trying to de-risk it. Your investor partner is trying to de-risk it. They want to analyze the deal. So from an inspector standpoint, we're leveraging 27 years of our experience in the Chicago market, in the suburbs, and more lately, South Shore has been incredibly active, and as we discussed earlier, as part of the Opportunity Zone. We created programs to help investors make informed decisions before they even write the offer. Now, a lot of you probably had inspections, and how many vetted deals blow up during an inspection? Tony already said, I scare them. Right? Okay, so some of you have had deals blow up during an inspection. The problem is it's happening because there's a lack of knowledge right in the front when you're making the offer on the building about what that building represents in terms of what may need to be done from a CapEx standpoint. How's the masonry look? How do the porches look? How's the electrical system look? How's the plumbing look? What do the single of these units look like? Because you're working off brochures. And you're trying to analyze an entire landscape of opportunity and figuring out which one is the one that I make the offer on. So we created an investor program that's a abbreviated inspection that will help inform you about what the major systems are looking like in this building at this moment in time before you write the offer. So that when you write the offer, you're now writing the offer based on knowledge. And if you get to a point where the seller's looking at it and the seller is saying, well, I like this offer, what you've done now is you've shortened this process up, right? And you de-risk the possibility of this deal blowing up when you get to a full inspection, because now you find things out that you didn't know existed before. And in the meantime, you've tied up your earnest money, you've made commitments with lenders that are already starting the due diligence process, your attorney's busy, the agents are busy, and that program was designed to help you understand what the building looks like right in the front. And then it's followed up with a full inspection, where we're analyzing the entire system. So when you're in your due diligence period, now we're going through the electrical system. We're taking the electrical panel apart. We're looking at the branch wiring to look for hidden defects. We're looking at the health of the plumbing system overall. We're evaluating and taking apart boilers and furnaces. And we're in each unit, documenting each unit, so that you know from a value add standpoint, which is really what this is about, right? It's value add property, because that's how you make your money. You're increasing the value of the building, not just from a brick and mortar standpoint, but from the income standpoint. And income increases not just by raising rents and improving units, but reducing operational expenses, because it all comes down to the bottom line. And that's the full inspection. So we're documenting the units so that you can go in there with a full scope of work and hand it over to a contractor and says that it needs to be done in, 201A, and the bathroom needs to be done in 302. And if there's large CapEx, you already know what that looks like. And we collect bids on that, and then we help you through that process.
Let me put this in perspective. Ron,
Yes, sir.
about how many properties would you say you walked through in the last 24 months? Either buildings or dollar amount or both?
About 3,000.
3,000 properties. He's analyzing these properties, and he can spend 5 minutes in that property. He can tell you things from the outside of that property about what's going on inside the property. Okay? You spend the money up front, and you make a decision on whether or not you're going to get into that deal. You can get into that deal and find out a year later if you're just blindly going into the deal that you made a mistake. You want to make the mistake, you want to find out you made a mistake early as possible in that process. And that's why we call Ron. And that's why my clients from Hong Kong and from California, they call Ron. And they say, walk through this building. Tony gave me the financials. I analyze the financials. I can tell you you're paying too much for your insurance or your garbage pickup, or probably got some water leaks because your water bill is higher than everybody else I looked at with a 30-unit building. He can tell you there's some physical maintenance on this building that you're going to need to work on. Or this roof, it looks not leaking, but over the next 5 years, you're going to have some issues. Now, we got Bob Floss here. Bob Floss, transaction attorney. He's working with, I don't know, how many transactions, dollar volume of commercial real estate deals have you closed in the last 24 months?
I mean, I'm just trying to think how many deals I've done with you guys in the last 24 months. It has to be hundreds of millions.
This guy, I mean, this is what we're bringing. We're bringing you resources that you can use to level up. I mean, it's hard to miss it because we get down in the weeds real quick. These guys can help you. These guys can help you. Noah sold his 3-flat in October of 2017. He bought an 8-unit building. Now you're talking about so many transactions I can't even keep up with. I get tired just writing them down. We're doing deals. These guys are closing deals. John did a deal. Come on. I mean, an 8 unit. 5 years ago. I got a thing here. This is the anniversary. It's the 5th anniversary of John's deal. And now he's rocket ship to the moon. And we put him in the room with you so you can learn from some of his mistakes, learn from some of his successes. He can share these best practices with you. And I got to move this thing along because the snow slowed us down. And y'all was going to the wrong door. I had to have Larry, the plumber, out there to tell you guys where the door to go to. Here's another resource. Human capital, financial capital, all this stuff. Bob, tell us some stuff.
Oh,
What are you working on?
what am I working on? I'm working on a lot of different things, but the main thing I'm working on is I try to help investors. I help people like you that are trying to scale up their business. My main client is a guy, I met him at a closing. You met him several times. 5 years ago when I met him, he had 5 rental condos. I said, what are you doing messing around just doing individual rental condos? He has 600 units now. I take clients that don't know what they're doing, they want to invest, and I scale them up. I do a lot with risk management with my clients. It's really good to hear everyone talking about risk, because one of the big things I do is everyone goes out, they find their deals, they're really excited to do the deal, but what I need to do is not, first of all, thank you for not booing me when they introduced the attorney. I know everyone hates us because we kill, we don't try to kill deals, but what I try to do is go in, say, okay, you guys have already underwritten the deal, but now we need to insert a risk component on your deal. All these buildings are not going to run cash flow positive all the time. Not all of them are going to run without any repairs on them. There's going to be issues with them. We try to go in and say, all right, they told you how much the income and expenses are. Let's try to find out what the income and expenses really are, and do the best during the due diligence to try to get those numbers to what the actual numbers are. We try to help with, the city of Chicago, breathing down you guys next with the administrative fines. I've had buildings where you get a trash fine every week, just they won't stay off of you. So we try to do that. I try to give my clients case management updates. If you guys didn't get a folder, I put some information in the folder for you. A lot of the case updates that are going on, if you buy properties at auction, things you need to know at auction, if you're buying those condos, perfecting the lien on the property so that they don't come back to you for all of the unpaid association dues. If you don't get in there and pay those association dues right away, when you buy it off auction, then they can come after you for all the unpaid dues from the association from the previous owner. There was a case that came down a few months ago. Someone suing because the tenant, they bought a property, the tenant owed a bunch of money to the other owner. They tried to sue to get the unpaid rent from the previous owner, and the court said, you don't have any privity with that person, you can't recover the unpaid rent from the previous owner. You can only recover from the rent from the moment you close on the property going forward. You don't get any of that previous money. The old owner can come back, but not you. Stuff like that, where I'm trying to monitor the rent control issue as much as I can. I printed out the legislation if you want to read it. Things like that, just trying to help you guys and girls try to become successful investors and try to mitigate your risk as much as possible, so that you don't end up with a bill. I've seen people with the biggest ambition get torn down by buying one bad building, and it just craters everything. And we try to eliminate that. We keep positive growth, just continue positive growth, because it's a snowball, just continue going up. One other thing, because I have a little bit of a different perspective of things from the attorney side of it, because people come to me, they have a deal ready to go, they have a private investor ready to go. They want me to do the mortgage and the note, get everything ready for closing. What a lot of these guys maybe won't tell you that I'll tattle on them a little bit. When they do their first deal, you're wondering, how are these guys getting this first deal together? And they say, I got an investor ready to go, we're going to close this deal, I need to do a private mortgage. I go, okay, who's doing the mortgage? Who's bringing the money to closing? I go, my dad. And that's how a lot of people get their start. So, the first people they get the money from is their uncle, their cousin, their dad, their, someone they go to church with, stuff like that. So for any of you that haven't done a lot of deals yet, don't be afraid to work over your network of people, because a lot of people I know that are successful now, that's where they got that sort of footwork, got their feet, under them to do those first couple deals with people that they knew. And then they scale up, and then you end up like this guy, where you have people that want to invest money with you from all over the country. You don't even know, and they're like, I want to give you money, I want to do deals to see what you're doing.
Can I elaborate on that?